featuring the industry's top leaders. This is the Executive Edge with Joe McClung.
Well, hello, Floodgate family. Thank you so much for joining us on this edition on Executive Edge, where we are just absolutely ecstatic to have Eric Heinz, who's the founder and the managing partner of Heinz Ventures, really talking about the world of venture capital and this MedTech space. Eric, I've had a chance to get to know you at LSI and conversation since, but most people listening might not. So give us a little background about you and also quick Reader's Digest version of Heinz Ventures.
Yeah, sounds good, Joe. Well, first of all, thank you for this opportunity. It's great to be able to connect with you and your audience and share some insights into the world of MedTech venture capital today. So my name is Eric Heinz, founder and managing partner of Heinz Ventures. I ended up getting into the venture side of the ecosystem through the operating path. So started my career as a product development engineer with Medtronic, did product management and marketing at Intuitive Surgical. And then my most recent positions were in corporate development, leading M&A at companies like Smith & Nephew. And so it's at Smith & Nephew where I really saw this pain point in the market that I just, going home from work every day, I just thought I need to do something about this. And the pain point was these big companies have to have great companies to acquire because they're not innovating in-house like they did back in the day. The culture just doesn't work with that. But they need high quality deal targets. And when we got into due diligence, there were times when we'd come up with risks or the deal was too dilutive, and we ended up having a lot of deals just not get through to the finish line. And I thought, okay, well, that's a problem, and it's a problem for our industry. So what can I do about it? And that's where I thought, well, let me take my operational knowledge and my network and bring it to that pre-seed and seed stage where I could partner with technical founders, not only to help them access capital, but more importantly, operational expertise, network, guidance from pre-seed stage to the subsequent financing rounds and ultimately to an acquisition. So pleasure to talk to you about this and any questions you can have.
Yeah, absolutely. And this is live. So if you put a comment below, everyone listening, that we're going to bring these up at the end of the conversation and allow you a chance to ask Eric some questions to pick his brain as well. And I love your background really from that foundational Medtronic, making the product experience all the way to business development really gives you that multifaceted outlook versus, just straight in finance and coming into this sector, right? You've been in the trenches and can really understand what it takes to bring a great product to market and then to look to attract the right investors. So that being said, can you give us a little insight right now on what's the landscape look like, for fundraising today?
Yeah, well, right now the markets are pretty tough. As you know, that the public markets have been quite volatile since the beginning of the year. So that causes a lot of people to want to sit on the sidelines and wait and to see the volatility decrease. They also are wanting to look at their capital allocation and make sure that they have the appropriate level of diversity in the portfolio. And so when it comes to venture, specifically, a lot of the larger institutional investors are also waiting for distributions from their investments from 5 or so years ago. That because of the M&A market and the IPO market also being quite slow, they just haven't seen those distributions. So we haven't seen the recycling of capital back into the early stages like we have in recent years.
Yeah, that makes sense. You're not getting the reinvestment back in as quick. Now, there was in the fall some major acquisitions, so it seemed like things were heating up. Is that kind of stalled as of recent with the volatility and the changes in the market?
Yeah, I believe right now, especially with the impact to the publicly traded companies, which are strategic acquirers in the space, they really need to focus on the more pressing issues around how to react to tariffs and other uncertainties in the current market. And so my thought is that if I would imagine a lot of them are probably waiting to see what happens with their current operating businesses before they spend a lot of time on these longer term strategic investments like M&A.
Yeah, makes sense. I know you're not Nostradamus, but do you have any predictions kind of coming for the rest of the year and into 26? What's your thoughts?
No, so I think that certainly with the new administration and the changes that have taken place, I think that that's something it's an acute change, and it's going to take some time to be able to see all this settle down. But the good news is it feels that a lot of those changes have taken place and that are now behind us. We're seeing every day how new trade deals are taking place with regards to tariffs, so that's positive. We're also seeing groups like our advocacy groups like AdvaMed going to Washington, D.C. and really lobbying for the industry to say, look, cuts at the FDA are going to be detrimental to our industry in the long run. So we need to revisit some of these, and especially if these reviewers are financed through user fees that the industry pays, they should not be impacted by some of these larger reductions in force that are going on. So it's great to have those experts really speaking on behalf of all of us in DC.
Yeah, absolutely. And I know we talked about, the tariffs too. Scott Whitaker talked to the tariffs at the Senate as well, just the impact. And, really it costs us more money because, if people aren't getting the care, most of that's government funded. So really, how do we accelerate that and get the care people need? Because, we know that care delayed is more expensive long-term, for everybody. So good to have those advocacy groups, sure. In any market, I know there's probably certain criteria that are important, as an investor, whether, hey, your Smith and Nephew hat on or, now at Heinz. I'm curious, what are some of those criteria that you look for in businesses? What are some of those big things that are fundamental?
Yeah. Well, great question. I think the first thing starts with the unmet clinical need. This has to be a pain point that physicians and patients are really feeling, and that you ideally have good data to quantify what that pain point means to the ability for providers to provide great care to our patients, and also what the ramifications are economically to the payers. And so being able to understand those, I think that's where we really need to start when we look at making investment opportunities. The second thing would be the talent and the founders. What's their background? Are they the right team to be able to execute what's going to be a very difficult road ahead? MedTech is not easy. This is probably one of the most challenging segments that you can be in as an entrepreneur. And so you have to be able to have that desire to learn, the desire to be coachable, and the desire to also say, look, I'm not an expert in everything, but I'm going to bring the right advisors around the table so that we're able to execute with a high probability of success.
Yeah, no, that's interesting. I mean, the first thing is, hey, is there a market need that's unmet, right? That we can really fill. Second, I thought it was interesting you brought up, what's the pathway to payment for it? Because I think you and I have both seen enough great solutions to market, but without a pathway to economic impact, either payment or cost savings, just never get market traction and die, right?
Yeah. Gone are the days where you have one or two decision makers about deciding whether a product comes into a hospital or not. Now you have a value assessment committee of 30 people that you have to convince of a cost multiple discipline.
Yeah. Absolutely. And I thought it was interesting too, right out of the gate, you talked about the team and talent, and having that, mix of willingness to learn, humility, where they know they're going to get it, take advice, have a track record. I'm curious, we talked about the market solution and the team and talent. How do you balance those, and what's most important? How do you make that analysis?
Yeah, I'd say that the team and the people are most important. And the reason is because in a new business, you're bound to come up against roadblocks that you have to pivot from. And having a team that can think about that and not be discouraged when things don't go the right way, but say, okay, this is what we know, this is what we don't know, and this is what we need to learn. And continue on that path to be able to ultimately still achieve the vision that they set out to achieve in the first place.
Right. Yeah, that's true. We know in any plan, but no plan survives first contact, so you got to have the ability to have the plan, the right IP, but you're always constantly making adjustments through the regulatory process, through the commercial process, wherever you are in that cycle. It makes sense. So how do you find that right team? Yeah, I'm going to continue to ask questions to Eric, but if you have additional questions, please comment them below, and I'll pull them in here at the last little bit. Now, I'm curious, you talked a little bit about your background and experience and where you saw the gap in the market. But Heinz Ventures, where are you guys providing a unique value into this venture capital market or capital market in MedTech?
Yeah, I think that there's three different areas that we really are focused on providing great value. The first one is to be able to source and screen fantastic deals. So I've been intentional over the last 2 years to build solid relationships with major research institutions and healthcare systems in the middle of the country here. So Cleveland Clinic is the most recent example of a relationship that I spoke about on a past LinkedIn post. So I think that's one of the key areas of value that I bring. The second one is the ability to expand the network and bring advisors to the table, or board members, or investors. So I'm part of a number of different angel syndicate groups where, because of my background in being an operator, I'm able to have the ability to present opportunities to fellow investors in this community who may otherwise not have even noticed the deal, or just didn't have the ability to really understand the value proposition for it, as well as the risk side of things from a due diligence perspective. So that's another area that I bring value. And then the third, I'd say, is as an active contributor to the business after an investment. So in one case, I'm an advisor, a business development advisor, helping the company that I'm working with connect with thought leaders in the industry, as well as other, so it could be neurosurgeons, emergency room physicians, patient advocacy groups, just being able to be that super connector and bring value where I can.
Yeah, no, that's great. I think it really leverages that background where you can see that emerging IP and truly have texture around that impact and unmet need in the market, and ask those key questions of reimbursement you talked about before, so you can elevate things that really don't have a financial track record, or the TAM isn't necessarily easy to understand, but you can elevate those, connecting that right capital, but then finally how do you make that capital work? It's about having connections of the right people, the right KOLs. So you're making sure that, the right people in regulatory, so you have the right direction as they go forward, is what I hear you saying. Right?
Yeah.
So
actually, Joe, that brings up another thought. The other thing that I really enjoy doing is being able to develop connections that the founders don't even realize, just because of the experience that I've had looking at different technologies over the years and different companies. What I'd love to be able to do is find opportunities to put 1 and 1 and make them equal to 3, and create those kind of synergies between something like a diagnostic tool and a therapeutic device that is married very well with that diagnostic. So that's one example of a type of strategy that I also am looking to pursue.
Yeah, no, that's great. Yeah, because that combination of, in your example, hey, we see the problem, great, but now I've got also a tool to fix it, that's even better, so you're exactly right. Because some of the problem on some of these new innovations is it's underdiagnosed, right? Because there isn't a good diagnostic for it. That's an interesting point. You've dealt with a lot of MedTech and startups and companies at different levels, whether when you're in M&A and corporate M&A or in Heinz Ventures. What's some of the key advice you would give someone, or are giving people actually now as a MedTech startup? What are some of the things you're telling them?
Yeah, so I tell entrepreneurs the first thing is develop relationships with everybody that you speak to. I myself made the mistake of having a first introduction and then just presenting my pitch deck and not listening, but just presenting one slide after another. And that's not the way to be able to build these long-term relationships that you need. So I think it's first being able to find ways where you have a connection and maybe a mutual alumni relationship, or a past company where you've worked in together, and be able to find those shared experiences. That's a great way to be able to build trust right out of the gate. I think the next thing is to be able to continuously learn. And so going to a lot of the conferences that are in our industry, LSI being one of those that we were at most recently, is just a great place to be able to see what's going on in the industry, what are entrepreneurs talking about, what are investors talking about, and what are the strategics talking about. And having that radar is fantastic.
Yeah. No, I think that's a really good advice. Is a lot of times you get that first meeting, you want to get it all done right there. You want to get your pitch deck, talk, sell, make it happen. But this is a marathon, many times. This is not sprints. So how do you first create that right cadence, that right relationship? And a lot of times by listening. That's great advice. That's one of the, at all levels, right? Whether I think that's true from your marriage to all the way to raising capital in MedTech. I think just taking that pause, focusing on the others, focusing on that relationship is always absolutely crucial. I love that. That's a good holistic advice. And then learning from your peers, right? There's in different verticals, different segments, everyone's really trying to achieve the same objective. Yeah. So what have they done? And being in those places where you have the opportunity to ask them that question, and being that, and see where people have done certain things different, and being open to learning and not married to your current plan, which gets back to your talent adaptability problem, right? Where it's just, they need to be adaptable. I think that's great examples. Absolutely. That's good. Well, I'm going to take a couple questions here from the the audience here. If you have more, please make sure you bring those in. Would love to listen to you there. So here we go. We got the excellent point is that value analysis committees aren't easy to go through with so many decision makers. Plus, companies lock hospitals under large contracts, making it easy for small players to enter. I guess it really is a statement, but the question is, how does innovation navigate that?
Yeah, well, that's a great question, and you're spot on. It is challenging, but I think one of the first things to do is approach this with the right mindset. A lot of people see VAC committees as being adversarial situations and, a hurdle that I have to jump through. But if you take a step back, what's the purpose of the value committee? Well, they want to make sure that the best products are getting in the hands of their physicians so that the patients have the best outcome. And so they've got a role to play. I think that they also have a role to make sure that costs don't completely spiral out of control. And so when you have the empathy to be able to understand the role of the committee and build those one-on-one relationships with the key influencers on the committee, then now you really are seen as more of a collaborator instead of another vendor. And yeah. I found, actually, I learned this the most at Intuitive Surgical, where we're not wanting to be seen as just a vendor for a robot, but being a partner and really helping understand the strategy of the hospital, the strategy of the operating room department, the physicians, and what they want to do to be able to advance care of their patients. And so when you think about it from a more strategic perspective instead of a transaction, I think you're a lot more successful with getting through these committees.
I love that. I love that suggestion. It's a good question here from Ashley we have here as well. It's like, her question is, in the tighter fundraising climate, what's one piece of advice to break through the noise? I mean, we saw how many companies were presenting, at these events. How do they get noticed? How do they break through that noise to find the capital they need?
Well, that's a really good question. I think that there are some angel networks that focus on MedTech. Every Monday, I'm actually on a call called Medical Mondays, where we review 3 companies and have a discussion about the merits of the opportunity. And I think if you can get in front of some of these angel network groups, that's a great first start, because the benefit here is that they also are I found to be very positive and collaborative in working with entrepreneurs and providing valuable feedback. You end up doing your pitch and have all kinds of issues, but they'll provide that feedback so that you're going to do better in the next conversation that you have with the next investor. And so I think that those are opportunities that you don't want to not pursue.
Yeah, no, that makes sense. I love those networks exist, right? Sometimes some of these MedTech innovators don't know those angel networks or those MedTech Mondays or Medical Mondays, happen. So it's I love that. Here's a question from Karen on, mistakes you see MedTech founders make when pitching investors? You mentioned one, listening, right? And just being focused on what they want to say and thinking about it as a one-time meeting. Besides that, is there anything else you might recommend to MedTech, innovators?
Yeah, I think that really understanding the market that you're going after is important. I've seen a lot of market slides that have billion-dollar plus TAMs and actually in some cases $1 trillion TAM, and this is a little bit outrageous. So let's really understand the market and your ability to be able to get traction in a specific segment that you're going after, and look at building up your market model both from a bottoms up and a top down approach, and be confident in the assumptions that you're making. I think everybody on the investment side of things is aware that market sizing is an art, and it's not precise.
Yeah.
But to be able to see that you did the work to look at different data sources and you've got logic in how you've built up your model, that's a lot better than just pulling one stat off the web and saying, this is the market that we're going to go after.
Yeah, no, that's a good point, because essentially you're creating trust and credibility, and understanding your really addressable market is that first step in creating that trust and accountability. And I can imagine, if you're $1 trillion, they're looking at you like, okay, yeah, right, and you lost a little bit of that credibility. So last question here I'll take. It looks from Abraham, if I'm pronouncing that correctly. When you come across a startup that you believe is a great fit for investment, what are the key factors you consider in your evaluation? Specific metrics or red flags that most influence your decision making?
Yeah, well, this could take a little bit longer to answer specific.
Yeah. We covered a couple. You needed to.
So some of and I can't really talk about specifics about my criteria, but in general, some criteria may include the geography of the company. Is it in the U.S. or OUS? Because that's going to probably play a big role in what the investor is able to participate in. The other thing may be the regulatory classification. Is this a class 1, a class 2, or a class 3 device? I think certain investors have different tolerances for the regulatory risk, and you need to be aware of that. I think the other thing may be things like the sector that you're in. Is this a B2B product or a direct-to-consumer product? Are you looking at something that's being sold to the chief information officer at a hospital, like some kind of a platform on the enterprise level? Or is this something that's really geared specifically to the clinician in the operating room? So those are very different businesses, and so those will certainly influence whether or not a specific investor is interested in a given deal.
Yeah, and I think that's interesting. Yeah, that's important to realize. Is that investors will specialize in certain areas, right? And good, and they have portfolio companies, because then they can surround better operational partners and things to help support them to ensure that their investment's going to have the traction that they expect, right? So understanding, it goes back to your initial advice: ask questions and learn before pitching. What kind of companies do you invest in? Where have you had the most success? What's important to you? Because you might not be the right company, and then you can simply ask, well, we do this. Who else specializes in my success? They might make the introduction that you wouldn't have gotten if you never asked, right? So it's great. I think that's a great advice, because there's you meet one investor, you've met one investor. Everyone's got a unique niche.
The other thing I'd add to that is that you really want to understand what's the value add that this investor brings to you as a founder that you're not going to get from the next person on your list. And so It could be connections to angel syndicates. It could be connections to these strategics because of relationships with corporate development groups and investment banks. It could be operational experience or clinical experience. So being able to really understand the backgrounds of the investor and not just thinking about the check size is one of the key things when it comes to your fundraising strategy. Yeah,
great. Well, I have time for one more question. Never mind. Then it has another question. M&A deals, distribution deals in MedTech. What are some pitfalls you want to avoid when trying to work with small companies? to potentially acquire. So I think, some of these, I think it's more of a strategics, putting your back when you were working as a strategic, what were some of those thoughts you had, that were important you to look for, pitfalls you want to avoid when doing distribution?
Well, so I think this is another one that could take a little while to answer, but in short, a distribution deal is a good way to be able to test the ability for the market to accept the product in the hands of our sellers. Now, one of the pitfalls is that it all depends on the sales structure of the organization. If it's a direct sales organization, you're going to have much more influence on your team to be able to have your sellers actually promote that product. If it's an indirect sales force, you have to think, well, what are their considerations? Well, they may be worried if I get this product in the hands of my customer that 6 months from now, the competitor may acquire the product because it's a distribution deal and it may not be exclusive or it may expire. And so that's a risk to consider from the channel structure of the company that you're working with.
No, I think that's really good advice, because I've seen a lot of distribution deals get started with companies that have robust sales forces, but they might be distributing a product that's got a very low ASP, and the core thing they sell is a high ASP product. And even though they work really well together, it never gets oxygen and just flounders and dies, just because you've got two positions with a physician and you're not going to get to that low cost sometimes. Right. So,
yes.
Good. Well, I really appreciate, Eric, you taking the time in the conversation. I just love talking MedTech in general. So we could keep going for hours, but thank you so much for being part of this Executive Edge. And if someone has specific questions or wants to make a connection to you, what's the best way for them to get in touch with you, Eric?
Yeah, thank you. Well, my email is pretty simple. So it's eric@heinzventures.com. And you could also take a look at our website, www.heinzventures.com. I put a lot of content out on LinkedIn, so happy to have more followers. I love to be able to share my insights and advice, as I'm also an entrepreneur and learning with every experience that I have myself.
Yeah. So you're saying you take the advice you give is to be constantly learning, and yeah, that's great. I love it. Good. Well, thank you so much. We've enjoyed it. And thank you everyone for joining in. Obviously this will be on our stream. So if you have additional questions, you catch this later, please just post below. We'll be monitoring it and elevating those questions or answering where we can. So thank you so much. And thank you for being on this Executive Edge.
All right. Thank you, Joe. This was great. Take care.